Good morning, everyone, and welcome to the European Crossover webinar and to a new week. Um, we do have U.S. equity markets closed today, but obviously foreign exchange markets are open, and we'll just take a quick look on those. I didn't mean to. I actually have the 20 and 50-day moving average. Actually, you can see, just notice here, the euro's at the 50-day moving average right now. I was looking at something on the NASDAQ because it had closed below the 20-day moving average, which is something it had not done for a while. We'll take a look at that. That's what I was looking at, actually. So I just threw it on there. Generally don't focus too much on the moving averages. And it's actually simple moving average. But I just noticed when I flipped to the euro, it's at the 50-day moving average here, as well as confluencing here with the 38%. And 2073 was actually Friday's bias chart support, if you remember. So we are a little bit weaker here with the euro. Take a look at the cable. A little bit more follow through on the downside. Aussie dollar. Finally starting to work a little bit lower here with the Aussie. We're just taking a quick review of everything. So Kiwi. Also, after this little break here on Friday, I was looking for a little bit more follow through. We'll go into what the bias chart support and resistance will be. Dollar CAD. We talked about last week, and I think it was a Thursday. I was saying about 2632 being really huge support, and that actually ended up holding. And 2632 was our support for Friday, but on Thursday we had 2654, but we talked about 2632 being huge, and we saw this big turnaround on Friday, and looks like we're getting some more follow through today. Dollar peso just a little bit higher. Anything of any real significance. Trying to find a bottom, and then cash dollar index a little bit higher here. And as I mentioned, we did go in and see the NASDAQ on the NQ closed below the 20-day moving average. You can see that. And that's where my focus was and why I actually had that up. And you can see here that you're looking here on the daily, and the market tested below the 20-day but closed above it. Here we tested it. Look how many times we tested it. Went below it, but we closed back above it. Dip. All these we were able to hold the 20-day moving average. And finally, on Friday, we closed below it. It really opens up the door because I think we will be moving lower here on the NASDAQ. There's Apple, Microsoft. We already have these on the daily up there, but just taking a quick look. Amazon. And Google. Here we are with Google here. NVIDIA. Oh, yeah, NVIDIA. Pretty good little break here on Friday. And then let's go to Facebook. And we know the problems that Facebook is having. And you can see here, we went right to that support on Thursday, 245. Tesla. And the pandemic plays, PayPal, Peloton, which did go and break some support there, short-term support, and eBay. Oh, let's go and take a look at the news. We did get Italian CPI come out. Actually, I'm not even seeing the. Oh yeah, the numbers did come out, just not the poll, which came in at down 0.2. And we do have Canadian housing starts today at 7:15. Of course, no U.S. data because we have a national holiday. And we'll take a look at the news. Australian New Zealand dollars weaker on soft U.S. data. Australian New Zealand dollars were slightly lower on Monday as a softening U.S. Economic outlook turned investors cautious, even as the data showed China's economy grew at a faster pace than expected in the fourth quarter of that last year. The Aussie eased off 14 basis points to 76.94 at midday, recovering from a one-week low of 76.79 earlier in the session. The Kiwi was unchanged at 71.28. Trading was subdued ahead of a U.S. holiday on Monday, while U.S. debt on Friday and a rising virus toll worldwide had cast doubts on global growth prospects. Optimism is being challenged as the reality of a tough few months is upon us. Aussie and New Zealand dollar banking group analyst said in a note to clients, the near-term outlook for the consumption, the main driver of the economic growth, is poor. The world's second largest economy on Monday showed it picked up speed in the fourth quarter with growth beating expectations and remained poised to expand further this year, even as the global pandemic raged unabated. That followed global sell-off of shares on Friday as hopes of fiscal boost from a $1.9 trillion U.S. stimulus plan were smothered by the prospect of stricter lockdowns in France and Germany and a resurgence of COVID-19 cases in China. The audit has been driven by the equity market sell-off in the U.S. on Friday, in particular losses in crude oil and copper. Stephen Dooley, currency strategist at Western Union, stated. The euro yen gains and euro squeezed as recovery doubts creep in. The dollar clung to gains on Monday, and the Japanese yen edged higher as softening U.S. economic data and rising global coronavirus and lockdowns, which we already stated. The euro dipped to a 6-week low of 120.66, and the Aussie led to a 1-month low of 25.20. The Antipodeans were soft against the greenback, and the Aussie touched a 1-week trough of 76.79. Better than expected Chinese economic data headed off the further selling, but was not enough to shift currency traders' moods. The mood soured after Friday's data showed U.S. retail sales for a third straight month in December, stoking worries that the recovery is running into trouble, as health authorities warned that the worst of the latest COVID-19 wave might be yet to come. Yeah, they're expecting actually 500 deaths by February. Europe is also facing surging cases, and Italian government that must survive crucial votes in Parliament on Monday and Tuesday in order to cling to power. The dollar index steadied after touching a 1-month high and traded at 90.82. Sterling sat near a 1-week low of 35.67. Nevertheless, many investors appear to be sticking in crowded dollar shorts, which had hit almost 10-year high last week, even though the bounce has carried the dollar index at 1.9% higher. The market is in a bit of a wait-and-see mode, debating about the dollar in terms of whether higher U.S. yields could provide support and whether we see further decline, said Bank of Singapore analyst Mo Sim. I think the balance of risk is still in a favor of inflationary environment, and therefore risk sentiment should stay positive, and we should see a further dollar decline. Elsewhere, the Canadian dollar slipped 2 tenths after reports Joe Biden plans to soon rescind permission by Keystone XL Pipeline, a project which would link oil sands in Alberta to refineries in Texas. Later in the week, President Biden is due to be inaugurated with heavily guarded Washington. Tensions are high after mob violence a few weeks ago. And I did post this one in the room. I just thought this was might add a little bit of extra juice for the dollar. Janet Yellen, President-elect Biden's pick to take over U.S. Treasury, is expected to affirm the U.S. commitment to market set currency rates. And when she testifies on Capitol Hill on Tuesday, the Wall Street Journal reported the Treasury Secretary nominee will make clear to Senate confirmation hearing that the United States does not seek a weaker dollar, the newspaper reported on Sunday, citing Biden's transition officials familiar with the preparation. The value of the U.S. dollar and other currencies should be determined by markets. Markets adjust to effective variations in economic performance and generally facilitates adjustments on the global economy, Yellen will say, accordingly to a report. The United States doesn't seek a weaker currency to gain competitive advantage, she's prepared to say. A Biden transitional official did not respond to a request for comments on Yellen's testimony. It also comes with investors heavily short dollars, with the value of bets against the greenback the highest in almost a decade, partly in anticipation of U.S. trade and budget deficits. Yellen is kind of signaling a hands-off approach, which is reverting to what traditionally been the case before Trump. Bank of Singapore analysts seem also figures the dollar would continue to decline. I think the dollar and financial markets will be a lot less of a focus in terms of verbal rhetoric for the Treasury Secretary, and the key focus will be getting policy implemented in terms of fiscal relief. Yeah, I think the dollar overall will eventually go down, but it just opens the door, since it does have momentum right now, for the others to say, you know what, I'll just wait and put those dollar shorts on, see if we can move a little bit higher. And that's why I wanted to go and reference that. Pedro says, can you take a look at gold? Yeah, we'll take a look at gold now. Let's go to that now. We actually should be rolling to April gold. So I still have February gold. So let's move this to April. Bear with me. There's April. I guess we can also take a look at the weekly. Nothing there specifically. We're kind of stuck in the middle here. $17.64 would be key. Do have a little bit of a hammer. And right there, 1814. So here. So we are defending this level right here, which is 1816. And that's here with the April, which we should be moving on to April anyway. As long as we can hold this, as long as you need to go and be able to defend 1816 on a closing basis. It looks like we're doing that right now. We're already $20 off those lows. So nice snapback here on gold. And it was key that they defended this 1816. So I think that'll be key for the day, which is still, it's almost $20 away, which doesn't sound like it's saying a lot, but it's key that they defend that. And then resistance on the upside is going to be which is, well, I've got 1859, but it's essentially it's 1860 on the upside. If you're looking on a very short-term basis, like a 2-hour chart, there's that 1816 on a very short-term basis, which you can see they're having trouble with. Right there, 1842 on a 2-hour chart. So if we go on and create a new drawing set, 2H, that's immediate resistance right now on a 2-hour chart. You see it right there at 1842. So they have rebounded on a daily chart. It's 1816, which we came off those lows, and you can see we rallied up to 1842, and we're struggling. We're dipping back. And immediate support right now is going to be that 1827. Kind of stuck in the middle of nowhere on a very short-term intraday basis. Don't forget there's no U.S. trading, but it is good news that they came back off those lows from 1816. As I said, we'll switch it back to the daily chart. And you can see here that they did dip below the 20 and the 50-day moving average, so it's clearly on a sell mode. Now you can see here where the 50-day finally trying to move up a little bit right here. We saw that little run up there. And here, this is the 50-day, and that's on the 20-day. So a little bit of move. But the key thing is that we're below both of those. So, of course, it's going to be in a defensive posture until we can start to move higher. If we do, but it might have a little bit of a struggle because, like I said, I think the dollar can rebound a little bit. Not that I'm any fan of the dollar in any respect whatsoever, but we're so oversold here, and the euro needs to go on and pare back. But for starters, we need to get back above 1900. And you see that. To get things turned around, we need to get back above 1900. And, well, not for starters, but I'm saying that's what we need to get above. And for starters, we would need to get above 1860. But it is key that they're holding this 1816 today. We'll go in and take a look at what we stand here with the NQ. And I do look for us to go lower here. I think we finally broke the momentum here on this NQ. I think we will be looking for a move down here to the daily, which is 12,568. I'll show that to you on a daily. I'll put that as a daily level. Here's what I think we're going to. Here's the actual daily chart, which is 12,432. That's what I think we're going to. Um, on the daily, this is where I think we will get to. But this, let's go back here on the 2H. This is a daily level here of 568, but I think we are going to go down to 432. You can see here with the 23%. We also had some support here at 753. But I think when all said and done, I think we will challenge. If you look here at this daily level that I noted here, let's see if we can. That's 658. If you look at 658, bear with me. There, you see right there? That's 658 right there. And you can see that coming across here. Matter of fact, let's go on and there you go. It's actually 656. But you can see here, now you can see what I'm referencing as far as that level. And it's actually, but Moxnix is not going to make that much of 660. Okay, let's just call it 660. But you can see the touches here, right here. You can see here, obviously key, because that's where we opened and we worked lower. Then you can see how this was kind of like a key level when they broke up to it to 660. It held that area. They tested on both sides, but it was a very good even line as far as I would say value, because it could have been a little bit higher, but still here you can see the significance. It was tested, but it was defended multiple times, and you can see here in the break here. So I think we will get to that level, which once again, if we go back to on the NQ, you'll see this 660, 658, whatever you want to call it. I think that's where we'll immediately go to, but I think this we're going to break down to is 1242, 432. And you can see this is almost similar in this sense, where the market had actually rallied here. Right there to 12,432. We closed right there, and then we ended up rolling down. We challenged it again, and we broke down lower. We made it up here, finally broke above it. We kind of just held in here. We broke lower. As we broke back, we came back and we challenged it. And you can see here where the market's just a lot of indecision here. I think that we will see 432. I don't know if we'll see it this week, but I think that we will go on and see that level here. And that might be as I was thinking about this, is that I think we just, and here's that 660, 658, whatever you want to call it, right there. You can see the significance here. But it's 432 that I think we could really see this market break down to. And so try to leave myself prepared for anything that'll happen. You can see here that this 658 would also confluence you here with this trend line that we've had in place. Look here. So a test of 658, you can see that will allow us to go below it, challenge it, maybe come back up here and close above it or close towards it. But I still think there's the potential for this market to go back down here. And 505 would be the 38%. 505, remember, and let's see, here's 469. So what we're talking about on a daily potentially is to, I think, 432. You can see the significance of 432. So 505, basically, that's just 12,500. This is only like 70 handles away. And that's what I'm thinking we could break here. And if you look here, this is actually where the 50-day moving average would be. That's why I think that this would make a good area for them to go to. If they break down, I think we could break here, probably hold this 658 area here. Maybe we challenge it, come back, but I think that ultimately we go to 432. And that would be the 50-day moving average. It'll probably be a little bit higher by then, maybe to here, but we break below it. And I was looking how far much further, maybe down to 312, 328. So I definitely would be buying this thing under any circumstance this week. I'd just be fading and holding for a break, because if we do lose that momentum, and there's a lot of risk this week, then we can end up sliding. And then this might be the first sign of some liquidation. I think we've already seen it, but I'm saying you can see the first real signs of liquidation. With that, let's go move into the FX market. Well, there's a euro, and so the euro finished the week at the Friday buys chart support of 2073. You can see that there. And there's our 2073 there. Let's kind of tighten this up a little bit. Support to start the week will be 2039, with 2064 being the 38%, and resistance will be 2150. Well, we'll go with the 2039, but remember, we're even at the 50-day moving average here. So 2039. Probably have to change these colors around because it throws me off. And also, I do like to use that pink line because it stresses key levels. You saw that on the NASDAQ. So probably have to switch around these colors to find out what's going to go on and work. But let's see. And for resistance, 2150. Doesn't look like we're going to get there, though. Onto the cable. Cable faded on Friday, although managed to close near 36 even still, despite it fading. Of course, we're lower here. Support to start the week will be 34.96. With additional support at 34.35. Resistance will be 36.62. It doesn't look like we have a chance to get there. That would be pretty much higher. And we have to kind of get a bearing as to, well, where are we now? If we're down here to 35.30, let's take a look on a 2-hour chart. That would be resistance there, 36.04. On to the Aussie. The Aussie saw a pullback on Friday. The pair remains bullish, although struggling close to 78 even. Support will be 76.23 with resistance at 77.76. Doesn't look like we're anywhere close to that when you look at this. And we're in a situation where we can see risk start to pull back. And that seems a bit of a stretch to go that high. Let's, once again, got to respect where we are right now. And you can see it's just been down, down, down. So resistance would be right there, 77.32. On the Kiwi, posted a key technical sell-off, closing below 71.52. The pair is now open to a reasonable pullback. Potential move is to 70.21 with immediate support at 70.81 and resistance at 72.03. So 70.81. Same thing here to say, oh, wow, it's going to be all the way up to 72.03 is a bit of a stretch considering how we are. Let's once again take a look at the 2-hour chart. Oh, yeah, you can see it right here, 71.50. And really the real resistance comes in because you could jump right back above there. The real resistance right now is going to come in right there, which is 71.65. Let's go and move into the dollar CAD. So the dollar CAD saw a staunch rally on Friday. The pair paired back intraday from the key level of 27.65. Resistance to start the week will be 27.65, followed by 28.17. So we'll go with the 28.17. And support will be 26.96. Well, we're flying away from that. You can see that. So we'll take a look at a 2-hour chart. Where would be support? Boy, did this 26.32 hold like a rock. I remember talking about that. I mentioned it 3 times in the chat room that it was so huge, and it did hold. I mean, we got as low as 25, I guess, or 26.24, but that 26.32 really held. Support now would be right there. That would be support, which would be 27.29. Dips to that area would definitely be defended. Let's go on and move in now to the dollar peso. The dollar peso is attempting to stabilize at the lows. Support to start the week will be major weekly level of 1967 with resistance at 1996, followed by 2004. So we're doing a little bit better here. I mean, it is 1996. Can we get to 2004? Things are heading its way right now. We'll just keep it at 1996. This thing's been a dog anyway. I wouldn't trust it no matter what. It might, but the next level would be 2004. Support at this point would be 1988. And actually, immediate support, 1988 followed by 1984. If they make a dip back down, I don't think they're going to dip back down towards there. They've got the momentum going forward. But you know what your risk level would be, which would be 1984. Dollar yen. Dollar yen is, for the most part, marking time in a 50 pip range of 375 to 425. The pair needs a close above 450 or below 350 to elicit sustained momentum. So we're really not doing anything here. So anything's possible. So same here. Here's the take right there and here. 352 and 452. Anything can happen in between here. To me, it's like Makes no difference. No, that's it. We're just trading in that. We need a break on either side, a close below or a close above to generate something. Let's go and move on to the cash dollar index. The dollar index managed to slightly close above the 90.60 level to finish the week, suggesting a temporary bottom may be in place. Resistance for the week will be 91.10 with support at 90.02. I would not read too much into anything within this range. The only thing, like I said, that helps is that Yellen is going to go on and testify that they're in favor of a stronger dollar. So that may allow this to move a little bit higher. Plus, risk is still going to be there for this week. Support would be right there, which would be 90.25. On to the cross rates. Boy, we're seeing some follow through on this Kiwi yen. The Kiwi yen broke low on Friday, allowing for a possible sustained pullback. Support for the week will be 73.40. With immediate support at 73. Oh, with immediate support at 73.72. We're not that far away. Maybe we hold here, but so the immediate support was at 73.72. We're actually just above that. We'll go with the 73.40 with resistance at 74.63. On to the euro pound. The euro pound is attempting to hold weekly level 88.75. Immediate resistance will be 89.05, which is above right now, followed by 89.42. We'll go with the 89.42. We supported 88.60 if we broke below that. Right now, we're kind of pulling away. Let's take a look at a 2-hour chart. It should be right there. 88.89 for now. 88.89. On to the euro odd. The euro odd recovered on Friday from the challenge of 56 even, but remained below 57, which we're above it right now. Immediate resistance will be 57.19, followed by 57.92. Well, we're above it, but we'll go with the 57.19 for now. But that would be, bear with me, because I don't want to put it all the way up to 57.92 yet. But the secondary would be 57.92. I'll tell you what, we'll go. Let's do it this way. Because stops can get this thing going. Because look at that. We're still, look at that. Just from here, 60.65, sheesh. We still go up another 300 pips. So to go up an additional 60 would be nothing here. Support will be the 56.20. Well, we've already run off of that. So we'll take a look at the 2-hour chart since the momentum has changed. And that would be support, 56.62. On to the Euro Kiwi. The Euro Kiwi is attempting to hold weekly level of 68 even. You can see here. The pair managed to finish the prior week above 69 cents. Immediate resistance will be 69.55, which we're above at this point, followed by 70.18. So that's what we're going with. It actually looks like we came close to tagging it too. So 70.18. You can see here. Looks like it got to 70.05, so pretty close. And support's going to be, do you see that bar right there? That open, that's going to be support. 68.90. Onto the Aussie yen. The Aussie yen posted a reversal on Friday, although remaining to hold the 88-cent area. The pair's immediate support will be 79.42, followed by 79.06, and resistance 80.31. So 79.42. Looks like, and this would be resistance right there. That right there, 80.18. Onto the guppy. The guppy posted a reversal on Friday. Resistance will be 41.58, with immediate support at 40.75, followed by 40.22. Well, you can see here we've pretty much made a good B run down here, so it's going to be 40.22. With resistance, you see that bar right there? That closed right there. So we come here, right there. That'll be resistance. 40.75. And lastly, with the sterling odd, so the sterling odd posted a hammer on Thursday and closed Friday just a hair below weekly level of 76.35. Resistance for the week will be 77.09 with support at 75.28. So we did make this push and we closed right there. We didn't get too much follow through here. You can see that. If we ought to turn things around, yeah, we'll go with that 77.09. That's what we said here. It's 2 pips higher than Friday. And support. It's going to be right there. You see this wick here? That would be support. They'd be trying to buy that back. 75.63. I'm not sure if we'll get down there, but that would be support. And then, as I said, you can take a look around here. You can see how Apple has made that close below 129. I think we're going to make it this move down here for starters, which is 124. And maybe we dip down here to this 121. You can see here Microsoft has been spinning its wheels around 216. Haven't been able to do anything with it. Looks like we're going to push down here, which is going to be towards 209. Amazon, here's that 30.95. The next real test, immediate test, would be right there, 30.20. We'll see how much further that wants to break. There is some support here at 30.63. I'll probably try and test that portion here. Google just kind of hanging around here. You see here, we've been below this trend line, but we're not breaking. We're just kind of hanging around here. Nvidia has definitely broken lower. Looks like we're going towards this 500 mark. You can see Facebook has had its own woes. We did come off that 245, a break of 245, and we'll send this market down to 237. But it was already lower to start with. So that'll be it. Thanks for joining us here on the European crossover webinar. Remember, obviously, no U.S. equity markets or I should say equity markets are closed today in the U.S. And we'll see you in the chat room. Thanks for joining us here on the European crossover webinar.